Thank you very much. We're going to talk about GameStop. The meme stocks have been in play. You know they're moving. You come in with anticipation that you're going to get that volatility, that you're going to get those trading opportunities, so you've got to be ready for them. And it's not always about being up, down, how much you win or lose. You can always learn from those trades. So while I'm going to show you what was a pretty good setup and ended up being solid, there's a lot that we could have done better about this trade. So this is a context. And I actually have gone with a 5-minute chart because, truthfully, most of this is about what happened yesterday's trade. In a couple of days of a monster run in GameStop, AMC as well, but it was the huge break and rejection off of 200 that sort of set the stage for this morning. You get a monster pullback, rug pull, whatever you want to call it. I mean, it's still at $180, right? But rug pull in the single day, and then we settle back in right at the end of the day into a 180 range. You had a wick bottom at 175, and we're trading and watching that level right at the end of the day yesterday. So that's your channel. You even have a higher low here at about 177. That sort of sets the stage. You got your bottom, you have that consolidation, you have the first level of support. So we fast forward to in the morning, coming into these levels. Now, if I'm thinking about a level breakdown, okay, if it breaks this, we've got room to the downside, it was that 175. So it seems pretty simple. You could say to yourself, short 175, stop at 77, or stop at 80. That seems like a simple premise, right? Now, obviously, we're going to end up getting in at 175. And here's where it gets tricky. You cannot get caught between two separate trades. And this is exactly what ends up happening to me here is instead of just saying set it and forget it, allow it to either break that 77 or that 80 level, we end up saying, you know what, I don't love that concept. I want to play the pop and roll with GameStop. It's likely to go crazy at the open, so I end up just trimming some for what I amount to a small, meaningless win. And then when it started popping, it's like, okay, let's go pop and fade. And it starts screaming against me. And next thing you know, I'm taking it out, and it's not really testing that level. We end up getting out of the trade. It's like, oh, what are we even doing here? And in that moment, if you have a plan, you can go back to it. If you don't, you should just sit it out. We go right back to the notion of if this is the channel that is supposed to be the top end of the range and true failure is at 175, well, you've already decided not to go with that 75 trade. Go right back to the top end of the channel. What was your original plan? It was to make that fade off the level. And when it comes up here, tests the high and rolls over in your channel of entry range, cannot break out of it, no matter what you've done before that. If I think it's a short, it is jump into the short position. So we end up getting that short back at 176. It's a roundabout way of going small win, somewhat big loss, to finally just take the trade that we're supposed to have in the first place. At 9:30, things can go crazy, and it's easy, very, very easy to see dollar signs and price movement and just go into hit that key mode. I want to be aggressive. When that happens to you, slow things down, go back to the overall plan, jump right into it. The stop goes in at 180. It never really does get tested. And then there's the flush. We end up flushing all the way down through to 170. When it broke 170, I did think that we were going to head down into the 165 range, but it didn't really happen. You can sort of see what happened the day before at that 170 mark. So I thought there was room below once it went. We got halfway through, and at this moment here, when we tested it the second or third time, we said, look, we got to get out of this. AMC was making a bottom at the same time as well. Let's just get out of the trade, walk away from it. There was one more test off of the pre-market high for a nice little scalp trade, and then basically sit it out. You've gone down towards that first target at 170. It's given you the move. At the point that it retakes this here, after finding that support at the 170 on the 5 minute the day before, rest of it's done. If you've got yourself some long setups, maybe you could have caught something off the V-shaped bottom, but that short setup is no longer there. The trade was in there, and we're able to get something out of it. But the real story is it should have been the best stock that I traded today. It was a simple setup. It did give you just that chance for a one-and-done style trade and just grab your $6, $7, $8 and run to the hills. Instead, I got cute. At least we're able to get back on target, remember what the original levels and channels were, realize that our thesis wasn't violated, and quickly jump back to the trade that we should have put on in the first place. And when you're trading something like a GameStop, especially going to the short side, you better stick to your plan. Because the day that it's really strong, it's going to run you over like an absolute freight train. So stick to the plan. That's what it's always about.